something that we actually do like. Do you think housing is getting closer in terms of timing to buy?
Yeah, I mean, housing's actually done quite well on a relative basis, which it should do in quad 4, in Q4 now at this point, and in November in particular. So again, as bond yields have gone down for 3 weeks in a row, what have you noticed? Housing does better. I've said this how many times? You need bond yields to go down for housing to go up. That's not just my thought, that's just the math, and that's the history of it all. If you go into the current slide deck on slide, let's see here, guys, jump into the housing part, front run me a little bit here. I think it's on slide 83, okay? So slide 83, actually, could we do 82 first just to keep you guys on your toes? And then I'll draw, what you'll see is, and this is the absolute return performance before quad 4 hit. So before the quad 4 hit, you know what hit? The two worst places to be before quad 4 hit. This is the end of the third quarter. The two worst places to be in your portfolio was housing. Why? Because interest rates went up all the way through quad 2, which was in quad 1 and quad 2, which was into the end of the third quarter. Now, once we got into Q4, these things started to outperform something like this, which has been body bagged. That's energy stocks. Okay, so go to the next slide if you can. And the empirical evidence on why this should be is that when interest rates were going up in August, September, into the October highs, the 10-year yield, look at this, okay? This is the 10-year yield versus builder's performance. You can see it. It's highly correlated, okay? So again, now that bond yields have fallen for 3 weeks in a row, you're seeing the outperformance of housing. If you're running a real hedge fund, which God knows we need better hedge funds out there. We need people that can actually put up some numbers, stop complaining and whining, don't blame me, put some goddamn points on the board. I mean, nobody wants to ever, all these hedge funds wanted to buy housing when it was becoming the worst sector on the earth. Now they don't want to touch it because they have so much like razor burn. I mean, it's intolerable. Razor burn. And we really are starting to see much smaller managers, individuals beat the living daylights out of these said geniuses. And a lot of these said geniuses, by the way, aren't clients, so I'm not speaking out of school. But some of them, you know, we have to really say, hey, look, wake up. You know, this is empirical fact. Now, you may have not known that the 10-year yield was highly correlated to the performance of being long a home builder, but that shouldn't make you worth getting paid 2 and 20. I mean, this is a pretty basic thing to know. Moreover, it should have been really obvious that even if you didn't know that there was a developing correlation throughout the year, in as much as the other way, we're going to go the other way around. I think housing's got the most value out of any cyclical sector in the U.S. economy. Obviously, we have a whole slide deck on that.